After a rough start to Friday's trading session, SPY bounced from below the 585 level to close at 594.18. That was an over 1.5% move higher, recouping most of Thursday's losses and closing the gap from all the way back on January 15th. It's hard to believe, but we are only about 1% away from the 600 level. This, in our mind, would bring us back into bullish territory. If we look back over the last couple of months, really going back to the middle of December, this 600 level served as major resistance and then again support on the underside with multiple bounces from both sides of this 600 level. So a crucially important level. A move back above that level would bring recent all-time highs back into play. You can see gamma exposure at the 610 strike is one of the larger gamma exposure levels, followed by the 620 strike on the upside. We've got our 0 DTE GEX at 594, which is rolling off come Monday morning. However, we are still skewed to the downside in terms of negative GEX. We've got negative 500 million gamma exposure at the 595 strike, as well as large concentrations at 590 and 580. Switching now to the daily view on the chart, you can see just how important the 580 to 585 level is for the SPY. This is a major support zone and basically bull's last line in the sand before things really start to fall off a cliff. So a very, very important support zone. We broke previous support at the 595 level and the 600 level earlier this week. And so a breakdown of this last line in the sand at the 580 strike, which is one of our largest negative gamma exposure concentrations there, would really see bears reassert control with the breaking of that crucial level. And so the way we are playing this market setup in our portfolio is we have been initiating new bullish positions over the last several trading sessions as the market has declined into more favorable levels. If this support holds and we see a continuation bounce into the March 21st expiration, those bullish positions will really pay off nicely. We've got a number of different option strategies in our portfolio geared at taking advantage of that potential move. However, at the same time, we are beefing up our hedges. So currently we have the 600 585. So this is giving us protection in this zone. We have the 600 585 put debit spread. We actually locked in profits on half of that put debit spread position. And we are going to initiate a secondary position lower in the case that the market ultimately does break down over the coming weeks. This is going to protect the rest of our portfolio and most likely give us some significant profits if there is a market breakdown. So we're trying to position ourselves at this crucial market point here to profit if the market goes higher and if there is a breakdown. So the second hedge that we're looking to put on would basically give us coverage in this zone. So if there's a breakdown below the 585 to 580 zone, we would be able to profit and get exposure to that move. So we're looking at something like the 575 to 550 put debit spread. And we'll be looking at various expirations, potentially in the March 14th or March 21st expiration. Taking a look at our gamma exposure data graph, we are still in fairly extreme territory, both on our GEX weighted volatility gauge, which is sitting at 80.7. Anytime that we're in this side of the gauge, this is basically saying that we are extremely high relative implied volatility. So implied volatility has been lower 80.7% of the time over the last 52 weeks. So we are in relatively high extreme implied volatility. And then on the left-hand side, we have our GEX intensity gauge. This is measuring current gamma exposure relative to historical norms. And so we see at negative 2 billion, we are basically coming out of extreme negative gamma exposure territory. Last week, we were down to nearly negative 3 billion. And this is the type of environment where we have extremely high implied volatility and extremely negative gamma exposure, which we tend to see reversals out of these zones. The reversals can be temporary or they can be long-term, but this basically gives us the signal to either close out our shorts or enter long positions, at least for a temporary move. And we did see the potential start of that move on Friday with the market moving up 1.5%. So we'll see if this continues into next week. Let's move over to a few names that we have on our watch list, starting with Nvidia. Nvidia, big move up 4%, trading at 124.81 at the close on Friday. In Thursday's video, we mentioned that we wanted to see Nvidia take a move down towards the 115 strike. We nearly got there on Friday morning, basically trading as low as 116.5 before sharply reversing throughout the rest of the trading session. The good thing about this move is that we are now approaching positive gamma exposure territory, which could certainly shift the dynamic in the options market. But from a risk reward perspective, I would either like to see a pullback and tag of this 115 level before entering a bullish position on Nvidia, or I would like to see some consolidation and for the 125 level to hold. So we're kind of in no man's land right here where we're currently trading. And so we're going to continue watching this. We could get a signal either Monday or Tuesday, and we will be looking to add an option strategy to our portfolio as soon as we do get that signal. Next, let's take a look at Coin. Coin getting wrecked nearly 50% in the last 2 weeks. Huge move, just absolutely getting crushed. It's actually coming down to a level now where we are starting to get interested in a potential bullish position in the name. The bounce off of this 200 strike that we saw Friday morning looks really interesting, and especially if we can get a continuation above the 220 level, I think momentum could easily begin building in Coin. Of course, this is conditional on the market momentum overall returning back to the bullish side, which has not really happened yet. We got a little bit of a start on Friday, and so we need to see some follow through before we have any confidence in going in a long position with a strategy on Coin. But that is something that is on our watch list this week. Again, remember, this is with our portfolio with hedges in place. So we are looking for long positions, but we do have hedges in place and we're locking in profits as the market goes lower. Next, let's take a look at TSM, Taiwan Semi, trading down to 180.53 on Friday. TSM was trading above 225 just back in mid-January. So a huge move lower. I think anywhere between the 170 and 180 zone on the downside. This is actually just above our lower dealer cluster level. And I think anywhere in this zone looks to be an interesting risk reward standpoint for a potential bullish position back up into this 200 strike. This is the largest gamma exposure concentration at this level. We're continuing to see volume in the options market at this level. This is an outlier strike trading 10 to 12% higher with over 20,000 contracts traded on Friday alone. So a lot of activity at this 200 strike. I think it's a very important level for TSM overall. And these are the kind of setups that we love. A big sell-off capitulating with a move lower, all the while large gamma exposure and options volume is coming in at higher strikes. These are the types of setups that typically make us the most money. And the reason why is because we can take very low risk, high reward strategies that have big payoffs if we hit our mark. So TSM looks pretty interesting from that standpoint. We're going to be watching this week for a potential addition into our portfolio. Next, let's take a look at Meta. This is a name that we're currently trading in our portfolio, and what we have our eye on is a move back up into this 700 strike. We did see a double bottom this past week with price basically bouncing off this 645 level. This is within our lower dealer cluster zone. Our upper dealer cluster zone, again, sitting back at the largest gamma exposure concentration at the 700 strike. We also see gamma exposure situated at the 750 strike. So there is still a lot of interest despite the huge move lower over the last couple of weeks. This is probably a healthy correction that we've seen over the past 2 weeks in Meta. And again, if market momentum comes back in this week and next week, this is one of those names that we could see rally back up into that large gamma exposure concentration at the 700 strike. So all of these names that we're highlighting here are names that we're looking for bullish positions on. These are going to be low risk, high reward type of strategies, all the while maintaining hedges in our portfolio and locking in profits on those hedges as the market goes lower. And like I mentioned at the beginning of the video, if the market does bounce higher and continue to rally, many of those bullish positions that we're adding to our portfolio will have big payoffs, especially if we get anywhere above this all-important 600 level. So that is the way we are approaching this market. We are giving ourselves multiple opportunities both on the upside and on the downside to make profits. We also have some theta decay strategies in case the market stagnates, although we feel that's probably the least likely scenario in this environment. So we've got a couple of theta decay strategies as well, just to try to collect some premium in case the market stagnates here just below the 600 strike. And only in the options market do you have the opportunity to profit in multiple scenarios. And so this is what we do at the Geeks of Finance. We structure our portfolio in such a way that we have at least the opportunity to profit in multiple scenarios. And if you're interested in getting access to our gamma exposure dashboard and our option flow analytics, head on over to geeksoffinance.com. You can sign up and become a member. You'll also get access to the premium channels in our Discord community where you can see all the moves we're making in our portfolio. And we've got a ton of great traders in there sharing their own trade ideas and setups as well. You'll also get access to our Geek University course, which is a 5-hour option strategy, gamma exposure, and our overall trading approach. So you definitely don't want to miss that. Link in the description below. Anyways, that's it for this video. Thanks so much everybody for watching, and we'll see you guys in the next video.